Hello, everybody. Welcome to another episode of the TF podcast, where we discuss technology, finance, and business. And every once in a while, that revolves around cryptocurrency, Bitcoin, and blockchain. I'm excited for my next guest. He is the founder and CEO of Blockchange. He has some recent news that just came out. It was pretty interesting in how people are going to be able to get digital assets a lot easier. Working with a pretty big known entity in the space. So with that, I'd like to welcome Dan Eyre. Thanks for joining us.
Great. Yeah. Thanks for having me, Jonathan. It's the second time I've done something with you guys, and
Yeah,
it's my pleasure to be here. So yeah, we had a recent announcement. Our company provides services to registered investment advisors. And so, we're really looking to bring digital assets into the standard portfolio, make it a portfolio standard. And recently we did an announcement with Gemini. We're partnering with them to offer those services to RIAs around the United States.
Yeah. So that, just to recap on that, then that's kind of similar to how someone might work with like an Edward Jones for stocks or things like that. Is that kind of similar?
Yeah, the idea is we wanted to provide something that was familiar, an experience that's enables you to scale management of what's called separately managed accounts. And these are where individual clients own the underlying assets. So you're not putting it into something passive like, a fund or, some kind of, I guess, like a Grayscale or a Bitwise or a Galaxy Digital. I mean, they're great products. But at the end of the day, for a certain clientele, they really want to be able to participate with the underlying assets themselves and owning those underlying assets. So rather than pooling it all together, we enable clients to invest in the asset class where the clients own the underlying and each account is managed individually, which is very similar to what an RIA would experience in, with stocks, bonds, and other securities.
Yeah, no, that's great. Yeah, that was definitely all over the crypto news over the last few days. So yeah, congrats on that announcement. And, tell us kind of how that all even came to play. So you've been around for about a year now, or a little bit longer than a year?
Well, yeah, so we started back in 2017.
Oh, that long, sorry.
So, yeah, so we've been around for a few years, but we kind of came out of stealth mode or initially about a year ago.
Got
and
it.
so
Got it.
we've
That's
been
right.
building this tool set, and it started in 2017. We had a mining company,
Okay.
and I was teamed up with my old college roommate. He went after school. We went to Penn State together. He went into security systems for nuclear power facilities and chemical weapon destruction facilities, so very industrial type solutions. And I went into enterprise software. And so I was in the enterprise planning, modeling, and financial analysis space. And I helped in a company called Anaplan go public, worked in their supply chain division and then their artificial intelligence division after that. And really, we teamed up to do this kind of a pet project at the time. And we wanted to understand how the ecosystem worked. And so we set out to do that. And we were mining, and we were also kind of doing a little bit of trading ourselves and getting the lay of the land, and started to build a retail solution. And pretty quickly we realized that, mining requires such economies of scale that it just wasn't going to work for a couple guys, out of their garages. And so we took what we had learned from that experience and tried to build tools to make the industry a little bit less fragmented. And our first iteration made it, simpler to interact with a number of different entities. We're looking at different exchanges, different custodians, and a big part of that was kind of the secret sauce of, the execution side. Execution side of it, mathematical optimization and everything. And so we really got into that, and we found that for the most part, those tools kind of existed in various capacities. There were good enough tools out there, if you will. But some of the tools that didn't exist were for registered investment advisors, because they're a little bit different than when you look at, tools for broker dealers or retail investors. They're very trade focused, individual trades or chaining a number of trades. Whereas registered investment advisors, they use kind of a modern portfolio theory approach. So you're really looking at percentages and allocations, model strategies, that kind of stuff. And so we spent the better part of the last 3 years building that solution that would be that first layer of infrastructure that registered investment advisors would use to interact with.
Yeah, super interesting. So I'd love to talk to you a little bit on kind of like the founder side of that, or like the kind of like the idea origination point. And what I mean by that is that like um, it's a very specific, very targeted concept that you're working on, right? So like my guess is you probably had people say like, that's too difficult, that's too hard, people aren't going to go for that, you know, because it's so specific and so forth. And so I'm just curious, like, you know, what was that like when you're kind of first working through that? And, you know, how did you get through probably a lot of those objections to where you're at now?
Well, it's funny, to some extent, as a founder, if people are telling you your project is great, you're probably too late, or there's a lot of other competitors, right? So you want
Yeah,
people to be telling you that no one wants what you're building yet.
exactly.
That's the right place to be in. And so a few years ago when we were looking at this, of course, we were getting that kind of reaction that it's like, well, there's no market for this today. Why would you focus on that? And the way that we saw this was there was this impending sense of instability, whether it's social or financial or whatever. I mean, we've been coming up on the longest bull run in our country's history and global economic history, and it just felt like something had to give. And digital assets were positioned really well there. And if you look at the registered investment advisor markets, it's $84 trillion in wealth in the United States alone. So it's massive, right? Very massive. And when you look at the kind of individuals that are in the crypto sphere today, they're either hedge funds, maybe some digital broker dealers, and then you have on the other opposite side of the spectrum, you have retail investors. And whether they're in it for idealistic reasons, or if they're in it just because they know that they can make a buck with the technology that they have, it's pretty saturated, right? They were all in there by 2017. Those that wanted to participate, they were already participating, and you had this whole section of the market that wasn't participating, which was these RIAs, and they couldn't do it because they're fiduciaries, so they have to do what's in the best interest of their clients. So 3 years ago, they wouldn't have touched it with a 10-foot pole. The asset class was poison,
Right.
and there's been a perception shift. But at the time, we knew that if we were going to build something that was going to be ready for prime time, at that kind of grade, that professional institutional grade, we were going to have to take multiple years to build it. And so we did a lot of research. We did a seemingly endless number of interviews with, one-on-one with RIAs. And then we also commissioned an independent research study across 250 different RIAs. And what we found was, when we compiled all this data, was the market was ready. At the time, it was about 26% of the market. So 24% of them were ready to do it, ready to look at the asset class. But they didn't know how, and they weren't doing it yet. And then there was about 2% of the marketplace that responded that they were getting some kind of exposure for their clients. And at the time, we thought, 2%, and there's another 24% that's ready to do this. What happens when the narrative does change? When this asset class does legitimize? And so we set out to do this, and we said, we could crash and burn, or we could be in the right place at the right time. And have a product that people need. And it just so happens that right now, with everything kind of collapsing and inflation looking like it's going to set in pretty soon here, it's looking like a good hedge for 2, 3, 4, 5, maybe more of your portfolio. And for a lot of millennials, it's kind of like, well, I can just go and get that myself. But a lot of the wealth in this country is with kind of baby boomer generation, and some a little bit older than that as well. And they care about diversity, portfolio diversity, just as much as millennials do, right? But they just don't know how to do the work, and frankly don't want to. They don't want to learn about this asset class and managing their own fees. So this is kind of, it opens up the opportunities, not just for, these individuals that are looking for their wealth managers to kind of handle the asset class on their behalf. But on the other side of it, we also have this massive transfer of wealth. So 73 million millennials are moving into their highest earning years, which means they got a lot more to spend and invest. And there's this, there's a lot of kind of estate planning going on, wealth being passed from generation to generation. And they're not looking at gold as much as preceding generations were. They're really looking at other ways that they can participate in a similar style of investment I think that's really what made, at the time when we were developing this and getting started with it, made it the most interesting to us, is because we knew that, eventually, this was going to become the standard.
Yeah, yeah, totally. And when do you feel like you started to get more confidence of that shift happening, right? Because people like us have had that positivity, or at least that outlook, for a long time, and telling
Sure.
people, and people like, yeah, right, we're years away, or this or that, or that's not going to happen. And so I'm just curious, from as a founder of a company that's reliant on that shift to happen, when do you feel like you started to get confidence that that shift was happening sooner than later?
Yeah, that probably occurred at the beginning of this year. There was a lot of kind of rumbling about, oh, well, 2020 is going to be the year for institutional crypto adoption. And, I think a lot of people sort of half believed it, right? It was about the right time, but everyone had been so hammered down by, the price beatings that we took in 2019, 2018, 2019. It just seemed like we'll believe it when we see it. But we started, when we were reaching out to a lot of these RIAs one-on-one, and really trying to get like deeper and deeper into doing these interviews and figure out, what would make an organization ready for this asset class. We started seeing people responding positively. And then all of a sudden we started seeing more of them. We started meeting more of them that were saying, well, I have my own. I wish I could do it for my clients, but I have my own. I know that there's something to this. And once we started seeing that, we were like, well, if they believe that it's, an interesting enough asset class to invest in on their own, I mean, that's the very definition of would you do it with your money, right? That's
Right.
the fiduciary standard, right? So at the end of the day, it really felt like that was when that wave started to happen, was when we were reaching out, we were having those conversations, and they were telling us, our clients have been asking us about these. And it wasn't just, oh, Bitcoin hit 20,000 or was close to 20,000. How can I get some of that? It wasn't just the FOMO. It was the sustained an increase in inquiries over time, even in years where we were seeing price declines. And so I thought that that was a pretty compelling marker and metric for impending adoption. And that's not to mention, there are a few other big indicators, like the addition of crypto assets to the CFA exam, which for those that don't know, it's kind of like the PhD of the financial world. So you got to learn about them now
Yeah.
to get your CFA. And then, on the other side, you had more recent news. You had Paul Tudor Jones taking a couple percent allocation to Bitcoin in his portfolio, and that's a big indicator. I think that sent the message to the market that, hey, it's okay to look at this stuff now. It opened the floodgates. Now everyone's looking to do it because you've got some more established names getting in there. And I think even most recently, and this was a few weeks ago, but the Office of the Comptroller of Currency indicated that now tier one banks in the United States can custody crypto assets. And
Yeah.
that's a big deal, and it set off a real race. So beginning of 2020 was when we started seeing that traction, and now is really where it's heating up to become, I would really characterize that as a race.
Yeah, definitely. No, it definitely is. And it'll be interesting to see how some of these, bigger banks that can custody crypto get involved, whether that means that they commit to, building out teams within their organizations, or they just want to partner and, leverage other people's tools or technology stacks. And, because frankly, a lot of people don't realize how old the legacy banking system is, like from an infrastructure standpoint, right? Like some of the technology even like predates the internet. So, it's, it'll definitely be interesting to see there. Um, you know, Walk me through kind of just, because I'm a founder myself. I always love talking about, kind of like these milestones. And so walk me through like how you guys started just talking and working with Gemini to begin with, because, Gemini is definitely a bigger player in the space. It's, founded by the Winklevoss twins, who own 1% of supply when it comes to Bitcoin and so forth. And yeah, I'd love to just kind of like that entrepreneurial journey of like how you, because I'm sure they probably get approached by many different companies on, partnerships and things like that. I'd love to just kind of understand that.
Yeah, I'd have to rewind just a little bit further to the to the point where we had a product that we had built, and we knew that we wanted to do kind of all of the UI and really the kind of like front and mid office stuff, right? Like that's what we wanted to specialize in. But the liquidity and the custody, we didn't want to do that. And why reinvent the wheel, right? We knew that we were going to have to partner with someone, and we wanted to partner with someone that had deep access to liquidity and had the right, kind of compliant custody solution in place. And so we were surveying the space, figuring out who we wanted to partner with. And we had a number of conversations, and, there's some great organizations out there that I think are going to be real contenders here moving forward. But the special thing about Gemini was they had all the right mix of ingredients. There was, their SOC 1 and SOC 2 compliance from Deloitte. They had their, kind of everything trading from cold wallets, insurance, all the things that make RIAs comfortable putting their clients' money in it. We were just looking for, you don't need to be aggressive. RIAs aren't looking for, 20, 30 different assets. They're not ready to diversify at that level yet. It's a handful of them, but they want access to, something that's secure, safe, fairly priced, and, and frankly, double belt and suspenders from a compliance perspective. And so the other aspect of it was Gemini on their exchange side. So for small orders, if you're looking for liquidity on an exchange, rather than doing some kind of like larger aggregate trades, you want a qualified custodian there as well, not a money services business. And that was something that made Gemini somewhat unique in that regard, in that they're a qualified custodian both on the custody side of the house, which there are many others on the custody side of the house, but also on the exchange side of the house. And so it was just the right mix of ingredients. And we really felt like that was, they were an appropriate partner to kick this off. And obviously, we built this, all of our infrastructure to be custodian agnostic. But today, they're really a fantastic partner, and we've been able to innovate very quickly with them on a lot of this stuff. So it's been very exciting to bring this to market alongside that team over there.
That's great. That's great. And so as Blockchange continues to evolve, do you start looking to more, crypto banks or exchanges, or do you start looking at traditional finance? What does the roadmap look like as to how you continue to expand what you're doing?
Yeah, and so we've gotten a lot of questions, whether it be from our investors or other players in the space, and they're saying, well, you're going to add the same kind of capabilities for stocks and bonds and all that stuff, and just diversify outside of the digital asset class and have, kind of more of a UMA approach, unified managed accounts. And our answer to that is pretty squarely no. We see this by the time digital assets become a portfolio standard, and most of the portfolios of all the clients of RIAs in this country have a 1, 2, 3, 4% allocation to it. That's going to be a while before that happens. There's plenty of business out there in that regard. We don't see by the time that has kind of been achieved, we're not going to go backwards. We're looking at this general arc, this general trend of the tokenization of assets, moving stocks and bonds and notes and everything to the blockchain, and having 24/7 potentially global liquidity and instant settlement. I mean, why go backwards, right? Who cares about stock certificates anymore? I mean, it's how it's done today, but we're looking to be the technology that is the de facto platform for all of that stuff moving forward. And so we see this general trend of tokenization to be, really in our purview. And so that's kind of where we're headed, is working with different organizations to make sure that that's what we're doing. We're adding support for, whether it's tokenized art, it could be obscure, right? There's all kinds of things we haven't even thought of yet, or other market derivatives, and then just generally securities. So that's what I'm most excited about is the general future, not just of what Bitcoin and Ethereum are doing today, but everything else that's going to be built inside the ecosystem that RIAs are certainly going to be interested in gaining exposure to.
You're essentially like building the digital wrapper, right? That goes around like this paper, right? Like, like you're saying stock certificates, or sure, they're digitized of course now, but meaning like from a tokenized perspective.
Right. Yeah. I mean, it's the management, the streamlining of the management of all of this stuff and the automation that's starting to occur today, and is actually pretty well underway in a lot of organizations. I mean, issuing a public offering of any sort, you want to be as efficient as you can. You want the greatest exposure that you can get. The days of the model where you've got one institution that you can provide that public offering through, instead of listing in a number of places or one specific region. I think the interoperability aspect of all of this is going to eliminate a lot of intermediaries, but it's also going to just honestly simplify the experience all the way down to the end client. And the other nice thing about that is we're going to start to see things, rather than just the dividend model with securities, we're going to start seeing all kinds of benefits that mirror things like staking and like lending that are native to the asset class and the protocol itself. This lends a lot of credence to, I don't know if you're familiar with Joel Monegro's Fat Protocol thesis, but just the general concept. So this is the general concept that with the internet, you had the majority of value was in the applications that were built on top of the protocol. None of the founders of the technologies that actually ran the internet, I mean, they weren't becoming ridiculously rich. It was everyone who utilized that protocol to do things.
Right.
Whereas if you look at this new wave of technology, the value is baked into the protocol itself, and there's a lot less. There's still value in the applications built on top of it, but it's dwarfed in comparison with the value that accumulates in the protocol itself. And I think that just speaks to this general transformation in technology, and markets find the most efficient way to do things. So that general trend is never going to change, and this is just plain and simple. It's a more efficient way to do things.
Yeah. No, super interesting. It's fascinating. Definitely is. Just curious, what got you into this space all to begin with? Like where did the what's your origin story on it?
Yeah. So probably, this must have been like 2012, 2013. The guy who is now our head of security, he's a cypherpunk, I guess you'd call him. But, he was talking to me about Bitcoin. And, well, I guess we can figure out when the date was for this, because it was $27 at the time. So whenever that was, we were talking about it. And he was saying, you should look at this thing. It's $27 right now, but there's really something to it. You should buy a little bit. And from that day on, we were having a couple beers when we were talking about it. From that day on, I just remembered it, and I thought to myself, he's usually onto things. He knows what's up. In every corner of the internet, he knows what's up. And this was one of the things that he seemed pretty excited about. And so I thought, I can't just not check this out. And so I followed it like a hawk since then. And I can't, I wish I could say that I bought, 1,000 Bitcoin when it was $27 a piece, but I didn't. I waited. I was a little bit more conservative at that time. But as the years went by, I just realized that there really, really was something to us, and it felt a lot like what I imagined. I wasn't around in the .com bubble, but at the beginning of kind of the internet era, I'm sure that there was this type of fervor for that technology as well, and so it just excited me enough that I thought, if it was going to be between artificial intelligence, which is what I was working on just before, starting this company, excuse me. If it was between that or blockchain, I saw blockchain as kind of an equally transformative technology that was going to impact people around the world just the same, right? And inherently, potentially with less computing resources.
Sure. That's interesting that you were in AI before, because a lot of people say that, like blockchain will help AI, be more efficient, or not more efficient, but more, what's the word I'm looking for? Like, I don't, not the cliche transparent, but just, I don't know, maybe it helps prevent it from taking over the world.
Yeah. So, I mean, at the end of the day, probably something worth mentioning there is, you've got all of these enterprise systems, just to relate it back to the world that I was working in. You've got all these enterprise systems, and now there's like pretty good visibility between enterprises, because they can do their planning and modeling, and, there's still a lot of spreadsheets that go around, people sending, here's my demand plan that factors into somebody's supply plan. And you get that bullwhip effect where like there's a delay in time before someone downstream knows about something that happened upstream. And that's a big challenge that hasn't been sorted out. And there were all kinds of organizations, like you talk about, like SAP and Oracle and everything, that tried to build these solutions to do that and solve for that problem where everyone was interconnected. But the problem you run into there is that that environment to date needed to be permissioned. So in order for one organization to connect their data specifically to another organization, they need to have an explicit relationship. If you're looking at scaling that to thousands of partners and suppliers and customers in an ecosystem, you can't manage those permissions at scale. So you need to have some way, and AI is really I think the most interesting way to approach that problem, with looking at, well, who should be able to get these permissions? What are the criteria that they must satisfy to get those permissions? And I think, it was a couple of years ago now, but the folks over at VChain were working on a project called distributed data vending that was meant to do that, a retrieval from a matrix that kind of mapped, okay, where are you in relation to the type of profile that should be able to access, this particular set of data. And that was super interesting to me at the time, and still is. So I recommend taking a look at that if you're interested on how those worlds intersect, blockchain and AI.
Very cool. Very cool. Well, shifting over to current events and what's happening in the world today, I'm sure the way you all operate your business has shifted. I'm sure you're all working from home. Were you already working distributed before pandemic?
Oh yeah, from the very beginning, we were always a distributed company, and we've always been pretty. I don't want to say like necessarily like lean itself, but we followed a lot of those principles. We did a lot of things in an agile fashion, and we're big fans of using tools like Monday.com is big favorite of ours. It helps us collaborate all over the place. I swear they're not paying me to say anything, but yeah, I mean, we like to work as a remote team, and we're big fans of having your life. Not giving up your life just to work on a project that you think is really, really interesting, really engaging. So, not much has changed for us.
Oh, that's good. That's good on that front. And when you think about just what's been happening with the markets overall, I'm sure you have some interesting opinions on this, right? So, it was like, I think it was like March 12th is the day where everything just crashed. And it felt like, all right, the bubble finally popped. And sure enough, it's been just rocket shipping ahead since then. What's happening? Why do you think that's happening? Like, is it artificial? Is it real? Is it just like inflation, or sorry, not inflation, but stimulus driving it, right?
Well, I mean, I saw an article, I think it was this morning actually, because, I'm a firm believer that what we're seeing right now is artificial. I mean, how could you believe that the mechanics of economics itself is an avoidable phenomenon, right? You look at the invisible hand, and at the end of the day, it's just an extension of the laws of physics, and behavior of humans. So introducing more and more of a currency is not going to solve your problems. It's just a temporary Band-Aid. But at the end of the day, you can get a pulse check on all this stuff. I mean, there was this article on Walmart's earnings that came out, and they're just about the closest to the pulse on the economy as possible, because that's where the average American spends a good portion of money in. And so as the stimulus faded in the sort of the unemployment benefits and everything, so did their rally in terms of revenues. That to me says it's a temporary increase provided by stimulus and unemployment benefit and everything. But at the end of the day, I mean, we're going to pay the piper. Sooner or later, we're going to pay the piper, whether it's right now or we do another round of stimulus. And that's why this asset class, I think, is becoming so interested to professional wealth managers, because you can't look at this market and say, and just kind of plug your ears. You really have to pay attention, because this could be one of the most fundamentally impactful events and chain of events in the history of our country.
Well, it's interesting that Bitcoin has, you can say that it like has gone up and down and been volatile, but for the most part, it's actually been more stable, right? Like, sure, it went down just as everything else went down, but it's been steadily climbing up, and it hasn't really had like massive swings like it has had in the past, right?
Right.
You know, sure, it might go up a couple hundred, or it has gone as high or as low as 1,000, but for the most part, they're like these steady increases, steady decreases, and so forth. So that's been kind of interesting to see overall. And then also it's been like the best performing asset of 2020 too. So like that's pretty
Yeah,
interesting
it's
too.
funny that you mentioned that, because I was having this conversation the other day with our head of product, Griffin Knight, and so we were talking about how it got clobbered. You know, just like everything else. You're right, it got clobbered, but for a very brief period of time, and without any stimulus. You know, no one introduced additional supply of Bitcoin, right? Without any stimulus, it recovered and drastically outperformed any other asset class since then. Um, and I think the thing that strikes me about that is, you know, that is the invisible hand in free market economics at work. And the market found that that was the right place to put your money in the event of a black swan, you know, kind of taking place globally. And it's not just the United States where people are doing that. It's all over the world. So I found that particularly compelling, and I think, you know, it's becoming easier to evangelize this asset class for that reason and a number of other reasons. So
Yeah,
pretty
definitely,
cool.
definitely. So what's coming up next? What's on the horizon for you guys, or what's happening in the world? What are some predictions?
Yeah, I mean, so if we're talking about just the general world, I mean, I think it's tough to call when we're going to see a vaccine. It's a little bit disconcerting that you know, you really only have, the CDC, I think, said recently that immunity only lasts for about 3 months. So it's just enough time to catch it the second time around, you know.
Amazing.
So,
Wow.
you know, with only a 3-month immunity, if that is indeed the case, um, you know, we're going to see a lot of manufacturing of vaccines, but, you know, there's the whole concept of supply chain, which used to be my forte. You know, supply chains are long. It takes a long time to manufacture things to the right standard. And before we do that, we got to go through clinical trials, make sure it's safe. And then when we start distributing it, we got to make sure that it gets to everyone, not just the people that can afford expensive vaccines. So the
Right.
question is, how long is that going to take? If you believe Bill Gates, probably the end of 2021. I don't know what the answer is, but, you know, the developing world is going to have a lot harder of a time getting rid of this than you know, the wealthy world. And so that's a continuing, you know, concern of mine, is just how is all this going to play out.
Yeah.
But other than COVID, I think, you know, just in terms of the economy, we're going to start seeing, you know, a lot more migration to more efficient infrastructure, as we mentioned earlier on this call, just because people are doing things remotely now. You know, they're not
Hmm.
exchanging physical things. People aren't going into the same offices. They're not working out deals person to person. There's a lot more automation coming into place. That's a broader trend that you see with, you know, things like robotics. You know, I'm a big fan of 3D printing, and actually, my wife, she works at a company that does. They basically use genetically engineered bacteria to produce human and animal proteins without using humans or animals. And that kind of stuff gets me really excited, because I sort of see this convergence of technologies on the horizon, where you have, you know, potentially blockchain acting as, you know, for structural integrity, and then you have machine learning kind of spotting things, say, in your genome that could result in specialized medicine, and then a number of different you know, components of biological building blocks that we haven't had before. So I see this future of very, very personalized, genome personalized medicine on the horizon. I don't
Yeah.
know how long, but it looks like it's starting.
That's interesting.
Yeah.
Yeah, it'll be interesting. And then we, you know, we only have an election coming up in here in a few
Right.
months that, you know, either way is going to make things different, right? So, yeah, super interesting times. My friend gave me a call. He calls me today and he was frustrated about something, and he goes, "I'm convinced we're living in a simulation. We have to be living in a simulation."
Yeah.
And I'm like, what
Well,
happens? I'm like, all right. I mean, like, maybe.
well, I mean, so what was it? I think it was Elon Musk that was talking about that, right? The probability, like, we're pretty close to having convincing simulations ourselves, right? So what are the chances that that's the first time it's happening in all of existence? I don't know. I don't know what the answer is. I
Who
hope
knows?
I'm not a simulation.
Yeah, I hope not. I hope I'm not. Yeah, hopefully we're not in the Matrix, right?
Yeah.
Wake up in one of those pods. No, thank you. Dan, question I want to ask you is the same question I ask everybody at the end of our show, and that is, what's a question that you have that you'd like to ask our guests that they can think about as they go about their day?
I'd ask, what part of the developing world can these new financial technologies most benefit? Who's it going to free? How are their lives going to change? And then if you're not in digital assets, why do you think it's not worth getting into it, given all of those benefits that you might see?
Yeah, it's a great question. It's a great question. Dan, what are some good ways that people can pay attention to what you're doing, what Blockchange is doing? How can they follow you, get in touch with you, et cetera?
Yeah, so you can go to www.blockchange.ai, which is our website, and we have all of our press coverage and all of the content that we create there. And we do some enablement, we do webinars, we do all that kind of stuff. So if you're curious about how digital assets fit into the RIA ecosystem, you can go there. Or you can also contact marketing at blockchange.ai. That's AI. I guess at the end of the day, if you're looking for press on the platform itself, it's the BitRIA platform. Looks like Bitria. And so you'll continue to see more about that as we roll out more exciting announcements.
Excellent. Awesome. Well, thanks so much for joining us. I really appreciate it.
Thank you for having me, Jonathan.
Yeah. Everybody, thank you for listening to another episode of the TF podcast. Please do us a big favor and make sure that you're subscribed to this podcast on wherever you're listening to, as well as do us a favor and fill in those stars. It goes a long way towards making sure other people get to see this. You can follow me on Twitter at @JGProduct, and you can learn more about TF Labs at tflabs.io. Thanks so much, and we'll see y'all soon.